Germany, the third largest exporter after China and the United States, has benefited economically from the two largest authoritarian countries, Russia and China. For a long time, Germany's economic success was based on cheap Russian energy and a deeply connected industrial supply chain with China. However, with the dramatic changes in geopolitics, Germany's model is threatened. The war in Ukraine and rising energy costs have made the choice between economic well-being and moral or political conscience difficult for German leaders. How will Germany choose? Hi everyone, welcome to Leisrealtalk. I'm Lei. This week, Germany's Chancellor Olaf Scholz became the first head of state in the West to visit China after the COVID pandemic. He was accompanied by a large delegation of German business leaders, including the chief executives of Volkswagen, BMW, Adidas, Deutsche Bank, Siemens, vaccine maker BioNTech, pharmaceutical companies Bayer, Merck, Wacker Chemie, and BASF, among others. Although Scholz was invited by Chinese Premier Li Keqiang, and the visit was only one day, the arrival of the German Chancellor gave Xi Jinping a much-needed foreign endorsement. She has not set foot in Western countries for over 3 years, and China's relations with the West soured during that time. Before the trip, Scholz was criticized for his decision to allow China's shipping company COSCO to acquire 24.9% of a terminal at Hamburg, Germany's largest port. He's also expected to allow Chinese takeover of the German chip production company Elmos. Why is Scholz becoming friendlier towards China amid increased geopolitical tensions? For more than a decade, the German economy has depended on Russian energy and the Chinese market. Although the Russian-Ukrainian war has reduced Germany's share of Russian energy imports, Germany's payment to Russia increased due to higher prices. In the first 4 months of this year, Germany paid 15.8 billion euros for imports from Russia, the highest amount in the last 10 years, compared to 9.9 billion in the same period last year. In September, the IFO Institute for Economic Research, based in Munich, conducted a survey of 1,060 German companies, which showed that a quarter of them plan to lay off employees due to rising energy prices. 57% said they will postpone investment plans. In addition, 13% are considering shutting down production, 9% are considering relocating their companies abroad, and 90% are looking to raise product prices to offset high energy costs. 2 months ago, Mercedes-Benz announced that the company's use of natural gas in Germany will be reduced by 50%. In the worst-case scenario, oil will be used instead of natural gas. Meanwhile, BMW, which operates 37 natural gas-powered facilities in Germany and Austria, is considering switching to local utilities in preparation for an energy shortage. And here comes China. While European countries are cutting energy imports from Russia, China is increasing its Russian gas and oil imports. Bloomberg reported on October 24th that Russia is shipping record volumes of natural gas and coal to China. In September, according to oilprice.com, China also imported record amounts of oil from Russia and Saudi Arabia. By the way, natural gas and coal are the two most common energy sources for the auto industry. While many European manufacturers are opting to move their production lines to other parts of the world amid the trend of decoupling from China, German conglomerates have increased investments in China. Are they moving their production facilities to China to take advantage of the cheaper energy cost? Could China be using its low energy prices to attract German manufacturers who are leaving Europe due to high energy prices? I don't have numbers to back that up, but I do know that Germany has become ever more dependent on China. German companies started to focus on the Chinese market after the global financial crisis in 2008. In the 2 years from 2009 to 2011, German exports to China increased by more than 70%. The German economy rebounded sharply, even more strongly than that of the United States. Last year, the trade volume between Germany and China reached a new height of 245 billion euro, while China remained Germany's largest trading partner for 6 consecutive years. A study found that in the first 6 months of this year, German investment in China totaled about 10 billion euros, far exceeding the peak of 6.2 billion euros that Germany had previously set. Compared with the same period last year, German imports from China also increased by 46%. The German automotive industry is the most dependent on China. German companies derive up to 40% of their annual revenues and a significant share of their profits from the Chinese market, including Volkswagen, BMW, and Mercedes-Benz, as well as many of their suppliers. In terms of green energy, Germany also depends on China to replace fossil fuels with photovoltaic power generation because 40% of the world's polysilicon, an important raw material for photovoltaic technology, is from China's Xinjiang region. In addition, the Danish telecom expert Strand Consult estimates that Germany's dependence on Huawei for 5G equipment is about 60%, and 65% for 4G. Because Huawei products are not necessarily compatible with Nokia, Ericsson, and other European telecom manufacturers, replacing Huawei equipment could be costly to Germany. It's more difficult for Germany to decouple from China than to say goodbye to Russian energy. If China offers not just the market, but also production capability, and now cheaper energy, it's even more irresistible. But I think it would be the biggest irony if German conglomerates are moving their facilities to China for Russian energy that China buys. On October 31st, 186 Chinese dissidents and intellectuals, led by Wang Dan, former student leader of the 1989 pro-democracy movement, signed an open letter calling on Chancellor Scholz to cancel his trip, citing human rights abuses. The letter stated that Scholz should not interact with Xi Jinping at a time when China has fallen into a dictatorship under the National Socialist model. In June, the newspaper Süddeutsche Zeitung published a commentary titled "Collective Surprise," referring to the long history of Western nations turning a blind eye to human rights violations by authoritarian regimes such as Russia and China, but always expressing shock when major news breaks in this regard. I think that observation is true. From the direction determined by the recent Party Congress, it seems that China is steering away from a market economy and returning to a socialist planned economy. The market outlook for these multinational companies is uncertain. And if the regime attacks Taiwan, Western investments will be confiscated and become the CCP's public assets. Chancellor Scholz and his delegates are essentially taking a big gamble. Here are my previous videos on the countries that have increased investments in China, including Germany and Taiwan. Yes, Taiwanese have also increased their investments in mainland China. The other video is about a geopolitical survey to find out people's perception of the CCP across the globe, and it's very interesting. Thank you for watching. See you next time.